Let us understand what is MACD. This is one of the technical analysis tool which is used, which is a part of your syllabus. So we have understood relative strength index, which was explained in the class. Uh, MACD we will discuss now. As the name itself says, it is moving average, convergence and divergence. It is the convergence or divergence of two moving average. One is a 12 period exponential moving average and another is a 26 period exponential moving average. I have already explained initially what is a moving average. Now, what is exponential moving average? Exponential moving average give basically importance to the later values compared to the previous values. We will see how it happens because the weightage of the exponential moving average is calculated using a formula. So we will discuss those formula also. First, let us discuss what is an MACD. So it is a trend indicator and also it will indicate the strength of the trend. How does it do? MACD has got two values which I just said. MACD is nothing but the difference between, that is, you subtract 26 period exponential moving average value from the 12 period exponential moving average value to get an MACD value. Now, whenever you take MACD value, the MACD value has to be read with reference to another reference signal. So, how do we get this reference signal? This reference signal is called as the signal line. Okay, so this signal line is calculated using the 9 period moving average of the MACD values. So you take 9 values of the MACD and you make an exponential moving average out of it, and whatever the value you get will become the signal line value. So if the MACD value is greater than the signal value, then the trend is up, and if the MACD value is lower than the signal value, then the trend is down. Also, as we have explained, MACD will tell you the trend also, and it will tell you the direction also and strength also. So if the direction of the trend is up, we should generally know how strong the trend is. If this trend is very strong, the slope of the price action will be very steep. Similarly, if the trend is weak, then this slope of the price action will be will be less. It means the stock will trend up slowly instead of trending up very fast. MACD will also help you the entry and exit timing for a trader. So it will help him identify, in consonance with other indicators, when to enter a market and when to exit. We will discuss with the help of a small example how these entry exits are taken. Now, reversal is one of the aspect of the MACD which the MACD will tell you when is the reversal likely to happen. So this reversal is indicated with the help of divergence. Divergence means if the market price is moving up, suppose let us say Nifty 50 is trending up every day, but the MACD values have started trending down, then there is a divergence because Nifty 50 is moving up, trending up, whereas MACD is trending down. So there is a divergence. So whenever there is divergence, one has to be careful. They have to close the positions in which they have taken. Suppose if they have taken a long position and if the MACD has started trending down, then they should generally close the long positions. And similarly, if the MACD is moving up but the stock is moving down, in such case anybody who have taken short position should try and close the short position. Everything in the technical analysis is a probabilistic value. Nothing is certain. So it is generally believed that all the technical indicators will give you a probability of move in a certain direction, probability of reversal in a certain direction. There is nothing called certainty. So the traders will ascertain what is the probability of their trade being successful and accordingly take positions using other tools like risk reward ratio, position sizing and all. So what are the key components of MACD? I have explained an MACD line that is manufactured through a 12 period EMA and a 26 period EMA, and you have a signal line, and finally there is another aspect, that is the zero line, that we will see how it is used with respect to identification of the trend of the a stock price or a Nifty. So histogram. Now coming to the histogram. Histogram is nothing but the difference between the MACD value and the signal value. So if the MACD value is 9 and if the signal value is 7, then 9 minus 7 is 2. So 2 is a positive value. So histogram will be positive. So generally we consider that the market is trending up or market is strengthening. If the histogram value keep increasing, then you can generally consider that the market is the strength of the market is gradually increasing. Now coming to the zero line dynamics, as I have explained, the MACD value and the signal line both oscillates between a zero center line. Whenever the MACD is above the zero center line, it is generally considered that the 12 period moving average is above the 26 period moving average when we are calculating the MACD. Similarly, if the MACD value or MACD is trending downwards below zero line, it is generally considered, or the value says that the 12 period exponential moving average is below the 26 period moving average when calculating the MACD values. Similarly, the distance of the MACD and the signal line from the zero line indicates the strength of the trend in which we are presently moving. Suppose if the MACD and signal line is above zero central line, then, and if it keeps moving away from this zero line, then we can consider that the market is generally strengthening in the positive direction. So let us see this with the help of an indicator, a small chart. This is the HDFC Bank 1 hour chart. All right. Now let us see how this. See, this is the red line, which this is the MACD window. Here in this MACD window, you can see generally that this red line is your signal line and this green line is your MACD line. So what is the first rule? If the MACD line crosses above the signal line, then we generally consider the market is going to trend up. So here let us consider from this particular point of time, as you can see, the market was in a downtrend. Okay. And as soon as the market, the trend line, that is the green line, crossed the red line, there was a slight up move here. Okay. And again, as this green line started coming towards the red line, there was a small movement on the downside. That is what it says. Whenever the MACD line keeps moving above and below the signal line, then the stock tends to make move in up and down direction. So why it is happening? Even though the MACD line is trending up, the signal line is trending up, right? Slowly it is moving higher highs. See, this was the last one, then it came here. But what is the rule which says? The rule generally says that whenever the MACD line crosses the zero line, then there is a strong possibility of the MACD stock trending in the positive direction with a higher strength. See, if you can see here, the MACD line started diverging away from the signal line. See, the gap between the green line and the red line started increasing. As the gap between green line and red line started increasing, What is the histogram? Histogram is the difference between the MACD and the signal line. Hence, the histogram also started expanding here. So when the histogram started expanding, you could see a, you know, rally in the stock. So that is what it says. The MACD will generally include, indicate a strength. See, MACD is a lagging indicator. So every entry and exit point always happens after the move has already happened. So you will be able to capture only a small portion of the rally, or the rally whether in the upward direction or in the downward direction which has happened. All indicators are all lagging indicator. Only price action movements are, leading indicator. Rest all indicators in the technical analysis are generally lagging indicator, except Camarilla pivots. Now coming to this particular point, as I have seen, so when the difference between MACD line and signal line expanded and histogram expanded, we saw a rally here. Okay. Now what happens, we can see here also in the reverse direction. Now what happened, even though the MACD is above 0, it is not trending. So it has started moving in and around the 0 line. So what happened, the market started becoming choppy, as you can see. Okay, as soon as the, MACD line started moving below the signal line, and at the same time you can see here that the histogram has started becoming red. Aggressive traders will take position generally in the towards the shorter side, because generally they know that the market may come down. They use other, price patterns and other also to understand in consonance with the MACD line. So some aggressive traders may take short positions here itself, but some conservative traders may say, as and when it moves below the 0 line, so they may take short positions. So that will give you a good downward rally here. So this is how MACD line is red with respect to the stock, and MACD can be used for exit and entry and trend direction. But it is always said that MACD should never be used in isolation. MACD should always be used in connection with other indicators like MACD plus RSI, MACD plus volume indicator. MACD can also be used along with Bollinger Bands. So if the MACD is used along with price action or volume or RSI, the results will be far better. Now let us see how MACD is calculated. So what are we doing? The first, we are calculating the fast exponential moving average. So compute the 12 period exponential moving average of closing prices. So we are calculating the exponential moving average of 12 period, and then we calculate the exponential moving average of 26 period, and then you get the MACD line by subtracting the 26 period from the 12 period. That is, MACD value will be 12 EMA minus 26 EMA. So you compute a signal line. How do we compute a signal line? To compute a signal line, you should have minimum of 9 values of the MACD, so that the 10th value will be the exponential moving average of the signal line. That's what is mentioned here. And you then generate histogram. What is histogram? Histogram is nothing but the difference between the MACD value and the 9 period exponential moving average value of the signal. So histogram will be MACD line minus the signal line. So what are the formula? So the EMA formula is very simple. The exponential moving average of today, which you want to calculate, will be equal to the price, closing price of today, into K. A K is nothing but an EMA multiplier, that is exponential moving average multiplier. We will see what is this value of the multiplier, plus exponential moving average yesterday into 1 minus K. So what is this K? This K is nothing but 2 divided by n plus 1. This is the multiplier which we are using here. So 2 divided by n, n is what? Number of periods. If we are calculating a 12 period moving average, you put n is equal to 12. And if you are calculating a 26 period moving average, we are going to put 26 here. And so on and so forth. So how do we trade from MACD? One is the bullish crossover, which I have explained. When the MACD line moves above the signal line, it is a bullish crossover. Second is bearish crossover. The reverse is also true. And finally, zero line crossover, which I have explained. When the MACD and signal line both moves above the zero line, and when they move below the zero line, what will be the reaction of generally the movement of the stock or a index, that I explained in the chart itself. The divergence which we have spoken, is seen here. See, as you can see here, this MACD values are making lower lows. See here, this peak is higher than this. This peak is higher than this. It is making a lower low, whereas the stock is making higher high. So there are many times you can see these type of divergences happening in the stock. But in spite of these divergence happening, if you can see, whenever the divergence happens, either the stock will stop getting very high trending movements. It will generally tend in the positive direction only. But what happens, the strength of the trend will be less. It means the slope will be smaller and smaller. So that is what is happening. Even though the MACD is on the positive side, so it has to be in the upward direction only, but the strength is not very good. So the stock price is trending slowly. It is not steep like this. It is not steep like this or like this. So it is generally trending the upper direction. It is going up, coming down, going up, coming down. So that is what happens. The market gets a little bit choppy, but trend line indicator is there. So if somebody can use these trend lines, they can generally get a good assessment of the direction of the market. So bullish divergence and bearish divergence I just explained here in the chart. So what are the practical tips? So as I have explained, you should use MACD with respect to RSI, MACD with respect to volume, and MACD with support and resistance. That's what I said, price action. If you use MACD along with price action, which is nothing but the support and resistance, then also you can effectively and efficiently use the MACD indicator. And MACD can also be used with the Bollinger Bands. So how do you use MACD with RSI? A simple example. See, RSI, as we have already explained, if the RSI starts trending up above from the value 30, that is the oversold value, and if it starts moving up, 50 is the neutral zone. So whenever the RSI crosses 50, it means generally the trend is going to be strong and in the upward direction. And at the same time, if you see the MACD crossing the zero line, then you will get a good upward trending movement. As you can see, it is a very steep upward movement. So that is what is happening here. Here the MACD has moved up the zero line, and here the RSI has moved above the neutral value of 50. So when these two are come together, then you have seen a good trending in the positive direction. So how do you use MACD with support and resistance? As you can see here, the stock moved up here and started moving sideways. Once they have started moving sideways, trader can just wait. As soon as the RSI crosses above 50 value here, 50 is the neutral zone. After 50, you may get a very good trending movement up to 70. And here the MACD has crossed above the zero line. So MACD and signal both have crossed at the zero line, and RSI has crossed above the 50 line. Then you have got a good trending movement. And at the same time, you can see here also, the stock has moved in the trend. It has become choppy here, so it became sideways, and this is the support, because it is taking repeated support at this point, and this is the resistance because it went up here, again came back, it went up here, again came back, went up here, again came back. So this is the resistance line. Once this resistance line is crossed here, so there was a very big trending rally given by the Nifty 50. So you can use support and resistance along with the MACD also in order to get a good risk reward ratio. Now coming to the MACD with Bollinger Bands. See, whenever the stock price is below Bollinger Band, like here, as we can see, And whenever the stock price is below this Bollinger Band, and if the crossover happens in the MACD, whether above the signal line or above zero, then you will get a very good trending movement up to the next Bollinger Band, that is the upper Bollinger Band, till upper Bollinger Bands. That is what has been explained here. So what are the common mistakes we should avoid? Don't trade MACD signals in isolation. Beware of the false crossover in ranging market. See, MACD doesn't really do very well when the market is ranging. That is, the market has become sideways. It will give multiple false signals. So one has to be very careful. What are the advantages of MACD? It is dual nature. It will help you to identify the trend also and the momentum or strength of the trend also. It will give clear visual signals, and it is excellent in trending market, not really good in choppy and slow moving market, because it will start giving lot of false signals. It can be used in any time frame, whether it is a 5 minutes or 5 weeks or 1 month or 1 year time frame. You can use anywhere you want. So limitation, as I have, it is a lagging indicator. So we see all MACD values are based on the historical values. So it is always a lagging indicator. So the entry and exit will always be late. If you are entering, you will have to enter late, and if you have to exit, you will exit late. You will lose some amount of profit. So that is the limitation with not only with MACD indicator, any lagging indicator will have a certain amount of profit you have to sacrifice in order to get a good profit risk reward ratio. So in low volatility areas, it will generally give false signals. So let us do some problems, and this is the most important for your syllabus. So it says both theory as well as problems. So we will solve about 3 to 4 problems on calculation of the MACD signal line, and that will be, I think, good enough for because it is all a stereotype problems. Most of the problems remain the same because the calculation of the MACD is also very limited. Here what is given? You have been given 12-day exponential moving average, which is 102, and a 26-day exponential moving average, which is 98. So calculate the MACD value. So how do we calculate? Simple. As for the formula which we use, you take the difference between the 12-day exponential moving average and 26-day moving average, which is nothing but 102 minus 98, which is 4. Now just calculating is not good enough. You have to interpret it also. What are we interpreting? It is a positive value. What does positive value means? The market is generally in the upward direction, or it is trending up, or the market is generally strengthening. The second interpretation is the 12-day exponential moving average value 102 is greater than 98. So the shorter moving average is greater than the slower moving average. Let us take problem number 2. The stock here, let us take the problem statement. The stock closed at 50 on a day 26. So the stock price is 50 on day 20. You can take any day. Day 26 is just a name given. Okay, it can be day 100 also. It can be day 150 also. We don't know what day, because if a stock has been trading for the past 30 years, we cannot generally say that it is on day 26. It is just a name given for the purpose of understanding the calculation of MACD. That's all. So with previous days 12-day exponential moving average at 48.5. So we have been given two values. What is the first value? The current price. And what is the second value? Previous day 12-day exponential moving average value, which is 48.5. And the third value which you have got is 26-day exponential moving average value at 47.2. What are we supposed to calculate? Both the 12-day EMA and 26-day EMA on day 26. For the time being, we will consider it as day 26. It need not be day 26. Okay, it is just to understand. So determine the MACD line value for day 26. So in order to find it, we have to calculate the smoothing factor. What is that EMA factor? That is exponential moving average multiplier. Also you can call it as a smoothing factor also. Everything will work. Some books say it is alpha, some books say it is K. So you can, whenever there is an alpha given or somewhere K is given, both means the same. The formula is the same. K is equal to 2 divided by n plus 1, or alpha is equal to 2 divided by n plus 1. So for 12 period EMA, alpha or k, you can write k also, you can put alpha also, which is equal to 2 by n plus 1. Here, since we are calculating the smoothing factor for 12-day exponential moving average, what are we going to do? We put n is equal to 12. So it is 2 divided by 13, which is equal to nothing but 0.1538. Now coming to the 26 period exponential moving average, same formula, in n, instead of putting 12, what are we putting? 26, because n is 26, because we have to calculate the smoothing factor for 26 period. So 26 plus 1, which is 0.0741. See, this 0.1538 and 0.0741 has got lot of importance and value. Okay, it is not just calculated just like that. Okay, now apply the EMA formula. What is the EMA formula? As we have just explained, EMA today will be equal to price today minus EMA yesterday into alpha value, this alpha value, plus EMA yesterday. Here what is happening, this formula gives more weight to recent prices while maintaining historical context. So what are we going to do? So EMA 12 is equal to 50. Price, today's price, what's what? Yesterday in that, if you see the problem statement said the stock closed at rupees 50. So if it has closed at rupees 50, the today's value is 50 minus yesterday's 12 period exponential moving average. The value is given in the problem statement as yesterday's 12 period moving average was 48 rupees 50 paise. So we are subtracting 50 minus 48.5 into the multiplication factor, that is nothing but your EMA factor 0.1538 plus 48.5. So what is the value which you are going to get? 48.73. This is the exponential moving average value for the next day, that is the day on which the price has closed. So for the price closure on of 50 rupees, the exponential moving average value is for 12 period is 48. Similarly, when we calculate for 26 day EMA for day 26, it is same thing. Here instead of 48.5, they have given the 26 period EMA of the previous day was 47.2. So we have to plug in that value of 47.2 here into 0.0741 plus rupees 47.2, which is nothing but the previous day exponential moving average. So EMA 26 is equal to, just do the mathematics, it comes to 47.41. So what do we understand? EMA 12 48.73 is greater than 47.41. What does it mean? Whenever the 12 period EMA is greater than the 26 period EMA, the market or index or stock is generally trending in the positive direction. Now what are we going to do? The MACD line is calculated by subtracting the 26 period EMA from 12 period, not the other way around. You should always subtract EMA 26 from EMA 12, not the other way around. Be careful. So MACD line is equal to EMA 12 minus EMA 26. So substituting our calculated values, what are you going to get? 48.73 minus 47.41 is equal to 1.2. See, this is the MACD value on the day on which the stock closed at rupees 50. So this MACD line is positive. It means the market is strengthening. Generally, the momentum is on the positive side. How much positive side we don't know. That we can only know when we look in consonance with the price action or RSI or Bollinger Bands. That's what we have discussed previously in the previous slides. Now let us take a new example. What we do here is, we will take 5-day prices, alright. Now the 5-day prices is 100, 102, 104, 103, 100. See, price can move up and down. There is no consistency in the price. One day the price can be 100, another day it can be 102, the next day it can be 104, and the next day it can be 103 also, 99 also. So price will keep moving the way it wants to move. Now what is the assumption here? We are assuming the 12-day exponential moving average is equal to 100 on the nth day. Nth day means any day, okay, on that particular day. And assume 26-day exponential moving average as again 100. So we have made an assumption that 12 and 26 DEMA is equal to 100. Now what are we going to do? We will try and calculate MACD values and other values related to MACD. So let us take the weight multiplier. Simple formula. The weight multiplier is always using the formula of K is equal to 2 divided by n plus 1. So K is equal to 2 divided by 26 plus 1 is nothing but 2 divided by 27, which you get as 0.1538. Okay. So we have to have two values. One is for 12 DEMA and another is for, see, it is a standard thing. For 12 DEMA it is 0.1538 and for 26 DEMA it is 0.0741. Here you do the correction. Here since we have calculated it for 12, it should be, it is not 26, it is 12 here. Please make that correction here. This is wrongly typed. This is a typo error. This is 12. This cannot be 26 because we are calculating the value of the K for 12 period also and we are calculating the value for 26 period also. For the 12 period moving average, we are getting here 12 plus 1, 13. So 2 divided by 13 it should happen. That is why if 2 divided by 13 happens, you get 0.1538. And if 2 divided by 27 happens, you get 0.0741. So please make this correction here as 12. So now, if we assume that it is the day 12 or day n, then day n plus 1, n plus 2, n plus 3, n plus 4, n plus 5, we have to calculate. So what is the EMA formula? EMA formula is price of today into K plus EMA of yesterday into 1 minus K. There are two different ways of doing it. One is price of today minus EMA yesterday into K plus the EMA yesterday. You can use that formula also, or you can use this formula also where it says price of today into K plus the exponential moving average of yesterday into 1 minus K. Both will do the same effect on the mathematical equation and you will get the same answer. So EMA on the 13th day or n plus 1 day is, what is this 100 price? So day price on day 1 is 100. That is the 100 we have put here. Okay. Now this 0.153 is the multiplication factor, that is K factor for 12. I have already told you, please put 12 here, it is not 26. Okay. So 0.1538 plus, what is this 100? This 100 is the EMA of yesterday. What is the EMA of yesterday of 12 period given? The EMA yesterday of 12 period is 100. So I have put 100 here into 1 minus K. So 1 minus 0.1538 is 0.8432. If you do the mathematics, you will get 100 again. Now this 100 is again the exponential moving average on the n plus 1 day. Now on n plus 2 days, what are we going to take? The price today means here the price on the second day is 102 here. So we are plugging that value of 102 into the same value because it is K, the same value will come, plus EMA of yesterday, that is EMA of yesterday is this one. Since we are doing n plus 2, EMA of n plus 1 is 100. So we are again putting the value of 100 here and multiplying it with 0.8462. So you get the value of 100.31. Now coming to EMA 15. How does EMA 15 means? N plus 3 you can take generally. So here n plus 3 is what? 104. I have plugged in the value of 104 multiplied by 0.1538 plus. Now we are doing n plus 2, that is previous day's EMA. Previous day EMA is what? 100.31. So I have plugged in the value of 100.31 here into 0.8462, which will give you a value of 100.88. So, and similarly for the next one, the price is 103 and the value of exponential moving average of the previous day is 100.88. You will give 110. And for the last EMA, that is n plus 5, you will have this 105 as the value here and 101.21 as the value we have taken from the previous day EMA. So this is what you are going to do. Now we will do the same thing for 26, because we have to calculate the values of the next 5 days for 12 also and for 26 also. The same equation holds good, and here what we are doing, instead of multiplying it by 0.1538 here, what are we going to do? 100 is what? The price on that particular day, 100 into 0.0741 plus 100 into 0.9259, how it comes? 1 minus k, that is 1 minus 0.0741 will be 0.9259. So the value you get again is 100. So this is the value on n plus 1 day exponential moving average of 26 period. Now n plus 2 value of exponential moving average of 26 period will be, you take this price of 102 into 0.0741 plus 100 into 0.9259, which will give you a value of 100.15. And if you doing so on and so forth, same just the way we did here, you get various values of the exponential moving average of 26 period. The 5 values for these the 5 different prices which we have given, we have calculated the values for 5 consecutive days of 12 period and 5 consecutive days of 26 period. So now what will be the MACD? All you do is 100 minus 100, 100.31 minus 100.15, 100.88 minus 100.43, 101.21 minus, that will give you the MACD line. I have given an example for only one, that is the last one here, that is 101.79 is 12 DEMA minus 26 DEMA is 100.95, which will be 0.84. What does it mean? 0.84 is a positive value, hence the MACD is positive. MACD is positive means 12 period moving average is above 26 period moving average, and the stock may be in a positive, maybe, it is not certainty, it may be in a positive region or trending in the positive direction. Okay, this is problem number 3. Now let us see problem number 4. This is slightly different. Here we have directly given the problem has directly given the exponential moving average of 12 period and 26 period. Okay, and it is asking you to calculate the signal values for next 5 periods. Okay, now we are calculating the signal value. So DEMA 9 is equal to, they have said assume the exponential moving average of period 9 is equal to 2 as of now. Now calculate the MACD histogram also, they have said. So in order to calculate the MACD histogram, what do we need? We need MACD value and we need signal value, because MACD histogram formula is MACD value minus the signal value. So we need MACD value also, we need signal value also. For that we need to calculate the signal value for the next 5 days. For this 5 days you need to calculate a weight multiplier. What is the weight multiplier here? Here we are calculating for 9 period. So your weight multiplier will be 2 divided by n plus 1 mein n will be equal to 9 instead of 12 or 26, because we are calculating a 9 period exponential moving average of MACD. MACD values ಇಲ್ಲಿ ಬರ್ತದಲ್ಲ, ಅದನ್ನ we are going to calculate. So let us see how it happens. Here n is equal to 9. So k is equal to 2 divided by c. We have plugged in the value of n is equal to 9 plus 1, which is equal to 0.2. Now what are we going to do? We are going to calculate the signal value for n plus 1, n plus 2, n plus 3, n plus 4 and n plus 5. The formula will remain the same. Everything is same as we have done in the previous problem. This 2 value, where is it coming? This 2 value is nothing but the first day MACD is, what is the formula for MACD calculation? Exponential moving average 12 minus exponential moving average 26. 120 minus 118 is how much? 2. That is the value 2. That is first day's MACD value is the difference between 12-day EMA and 26-day EMA, which is equal to 2. That is the 2 we have put into k. What is the k value here? K value is 0.2, which we have calculated just now, plus 2 into 0.8. The first day that is the ninth day, you can generally say the nth day or n plus 1th day. Nth day is already given here, 2. They said the nth day value of signal line is 2. The nth day value of signal line I have put in as 0.8. So you get 2. But for the n plus 2, what is happening? N plus 2 is, how did we get this 2.5? The second day difference between 12 and 26 day moving average is your MACD, correct? So 121 minus 118.5 is 2.5 into 0.2 plus 2 into 0.8, which is nothing but 2.1. Now EMA 12 is 3. Where did you get this 3? Again, come to here, third position, n plus 3. 122 minus 119 is 3. That is the difference between EMA 12 and EMA 26 is your MACD on the third day, which is nothing but 122 minus 119, which is 3. That is how you are getting this 3 value. Plus 2.1, that previous day EMA is 2.1, that is what we have plugged in into 0.8. So on and so forth. Alright. So we got all these values. Okay. Now this is MACD as I have explained, which we just explained, where we put 2, 2.5, 3, 3.2, 3.5, the same values I have put here. Okay. Now you got the 9-day exponential moving average of MACD. What are those values? 2 here, 2.1, 2.1, 2.28, 2.28, 2.464, 2.46 and 2.67. Now what is the histogram formula? The difference between MACD and the signal line. See, DEMA 9 is your signal line, because this we have calculated using the MACD values. All these MACD values have plugged in here to get a smoothing value of a 9-period exponential moving average. So that is your signal value. So the difference between the MACD value and the signal line value is your histogram. So what is happening here? What is the interpretation? The histogram has slowly expanding. First it became 0.4. Then it became 0.72, then it became 0.74. So it means the trend is strengthening. The market trend is strengthening, because histogram is becoming positive day by day. It is, the positiveness is increasing from 0 to 0.4 to 0.72, 74, 83 and all. So you can generally consider the market is trending strong in the positive direction. So let us see one more problem on the MACD. Let us understand this. So given prices of day 1 is 22, day 2 is 22.5, day 3 is 23, day 4 is 22.8, day 5 is 23.2 and day 6 is 23.5. Here there is a very important assumptions have been made. That assumption is, assume simple moving average of first 12 prices as initial EMA 12, which will be rupees 22.1. And assume 26th period EMA on day 26, which is equal to 22.45. So given MACD value for the past 9 days, that is 19 to 27, this is what MACD values. You have to be very careful in understanding the question. See, given MACD values, these are the MACD values given for 0.15, minus 0.18, minus 0.2, minus 0.21. So these are the MACD values. So we have to calculate the weight multiplier, day 13 and day 27, 12 day and 26 day exponential moving average. So let us do it. So calculate the weight multiplier. K is equal to 2 divided by 12 plus 1. Why? We are calculating the next value of the 12 period moving average. Okay. That is day 7 or day 27, whatever you can call. So that is equal to 2 divided by 13 is again same. See, it will get the same value, because whenever you plug in n is equal to 12, you have to get 0.1538, because others are all constant. 2 is constant, 1 is constant. You are only changing n. So n becomes 12, means obviously you will have to get 0.1538 only. So let us take initial EMA as day 12. Okay. So we have to calculate day 13 day or day 7th or day 6th, whatever is the calculation. So EMA is, where did you get this value? The day 6 value here is 23.5. So 23.5 we have put into the value of K. That is the formula. Today's price into K plus yesterday's exponential moving average value into 1 minus K. This is the formula. So today's price is given already here. Day 6th price is given. So 23.5. So we have plugged in 23.5 here. Into K, we have plugged in that value here. Plus yesterday's moving average. What is yesterday's moving average? Yesterday's moving average, it is already given. It is for EMA 12 is 22.1. So I have put 22.1 here. So when you do the mathematics, you get rupees 22.31. So the 12 period EMA gives 15.3 per 8% weight to today's price and 84.62% to yesterday's exponential moving average, making it a responsive at a smooth value. Now let us calculate 26 period. Same formula, same multiplier, everything is same. So here K is equal to 2 divided by 26 period. So we are putting N is equal to 26. So you obviously you are going to get 0.0741 only. So on EMA 26 on day 26 is equal to 22.45. So price on day 27 will be is what? 23.5. How did you get this 23.5? We can go back. See 23.5 here. This is the 23.5. So if we go back and that is the 23.5. How did you get this 22.45? You get 22.45 because assume EMA 26 on day 26 as 22.45. Those are the two values we have taken here. So this smaller K value means today's price gets only 7.4% weightage, while yesterday's EMA gets almost 92.6%. This is common sense. So EMA 27 is equal to today's price. Today's price is what? On day 26, that is the last day. So 23.5 into K. What is the value of K? 0.074 plus 22.45 into 0.926. So where is this 22.4K? That is yesterday's EMA. That is yesterday's EMA is 22.45. So we have plugged in the value to get the next value of EMA, which is 22.53. Now you compute the MACD line value. Now let us calculate the actual MACD value. How are we calculating? It is the difference between 12 EMA and 26 EMA. So 12 period EMA on day 27 is 22.31 and 26 period EMA on day 27 is 22.53. So MACD will be equal to exponential moving average on 12th minus exponential moving average on 26th, which is nothing but the value of the MACD is minus 0.22. Minus indicates negative trend. So the MACD is in a negative trending movement. And also it says that you can see from the value itself, 22.31 is lesser than 22.43. It means 12 period exponential moving average is below the 26 period moving average. This signals a bearish momentum. Now we need to calculate the signal line. That is also left out. So the signal line is a 9 period exponential moving average of the MACD values. Now they have already given the values minus 0.1. These are all the MACD values. Okay. In the question or the problem statement, they have already said that these are all the MACD values. So all we have to do is take this MACD values and take the average of all this MACD value. So here we have taken, in first step, what did we do? We took the multiplier value. K is equal to 2 divided by 9. N is 9 because we want a 9 period moving average, right? So we have taken 9 here. So 2 divided by 9 plus 1 is equal to 0.2. Now in step 2, what are we going to do? We are going to take the average of all these values which has been given, because they have just given 9 period values. So we want the 9 period simple moving average. See, whenever there is no exponential moving average value available, the rule of the MACD says that whatever the last 9 periods value of the market prices are available, you can take the simple moving average value of that and then use it as a starting point for calculating the next 9 period exponential moving average. So that is what we are doing here. We are taking the simple average of all this. The simple average is minus 0.205. Now we want day 28 signal. Here for day 28 signal, we don't have the MACD value of day 28. So we have assumed the day 28 MACD value as minus 0.2. So the signal value will be minus 0.2 into 0.2 Okay, plus minus 0.205, because this is this SMA value which you have got, into 0.8, which will give you minus 0.204. So the signal line is minus 0.204. If we compare this to the MACD, we can identify the crossover potential of the stock. This is the how we calculate the signal value. So this is about how to calculate the MACD values, how to calculate the signal value, how to compare all of them. I think this much is good enough for as per the syllabus. So please go through it, understand. If you have any problem or if you have any doubts, you can always ask. I will try and clarify. Thank you.